Hey guys, Clint Williams here with ASP Commercial Group. Just wanted to take some time this morning, before I forgot about it, to make this short video in regards to multifamily analysis and understanding the difference between occupancy and vacancy. There is a difference, and if you're a newer investor out there and you're just starting to analyze properties, you could be seeing these numbers and you might not be seeing these numbers in some of the documents that you're getting. Usually you'll see a vacancy factor in an offering memorandum from a broker, but let's say you're not sure if that's correct. There is two key documents that you're going to want to get to actually figure out what this number has been in the recent past. Okay, and that's what I want to talk about. So if you're a new investor out there and you haven't seen a P&L statement, this is a document that you're going to need to get, okay? The most current P&L statement on the property, and you're also going to need to get the most current rent roll on the property, okay? Two key documents that you're going to need to figure out this number. So I did a screen capture here, and I want to go over it with you and show you what a P&L looks like and what a rent roll looks like for some of you new guys out there who are just getting started analyzing properties. So I'm going to show you a fairly quick way to figure out what that vacancy rate is. Because a lot of times when you're dealing with a broker, they might tell you that that property is 100% occupied all the time. Let's say they didn't put a vacancy factor in. And so you're not really sure if there is a vacancy rate. Well, there's always a vacancy rate because even though it might be 100% occupied throughout the year, also throughout the year, there are people moving in and out of those apartments. So that creates that vacancy loss, and you guys really need to understand what that is and understand how to get that number just from a couple of documents that you need to ask for. So let's go to my computer here, and I'm going to show you on the screen what a couple of these documents look like and exactly how to figure out this number.
Okay, hey guys, here we are in my computer. Wanted to go over a few documents that you should get familiar with when you're evaluating multifamily properties. I have a couple P&L statements here and a rent roll for one particular property that you're going to need. Okay, so when you're trying to figure out what a good vacancy rate to use for any particular property you're looking at, right off the bat, there's two documents that you really need to request. Okay. And that's going to be a P&L statement, a current one, and a current rent roll here. So let me go over this a little bit with you and explain to you what you're going to see on the average rent roll here. Okay, we have a rent roll here for a 24-unit complex, two different buildings here. Okay, and this is the typical information you're going to see on a rent roll. They might look different, but a lot of times you'll see tenant names over here, square footage, market rent, actual rent, deposit information, and their move-in, lease date, and expiration date for their lease. And this one actually has a last rental increase information on here. The dates there, so that's pretty neat. You don't see that too often, but you will see move-in date and lease expiration date on there as well. All that information is not necessary when you're first looking at a property. The main thing you want to focus on is actual rents right here. Okay, actual rents. Market rents are typically what a property could get at a market rate. It could be higher or lower. Usually they're always going to put higher numbers in there for market rent. Basically, they're saying this is what you could get if you bought the property, took it over, and released these units. Okay, so but that's not important either. You want to only look at actual rents. Okay, this is what's going to help you determine the actual gross income you should be getting. So we go down through here, we add them up, we look at the totals. 12 units in this building gives you a total right here. If it doesn't, you need to go through there and add all those up. This building looks full. We go to the next building. we're going to add up these actual rents too, and total them up down here, and they've already done it for us. And then we get the total for the 2 buildings, or the 24 units here, 9155. Okay, that's a gross monthly. Okay, you need to annualize this number to get your gross potential rents. Okay, when you annualize that number, that comes out to 109,860. Okay, and over here it shows that both buildings are 100% occupied. Okay, so when you're talking to a broker and they tell you the building is 100% occupied, well, that's great news, but that does not help you out with your analysis per se, because you need a vacancy factor to use in there. If you ask the broker what the vacancy factor is or the vacancy rate, he's probably, he might tell you a number, a figure, what the average vacancy is in the marketplace. A lot of times they won't. You'll have to come up with that information on your own. And you can also do that by calling around to other complexes in that market and asking them, hey, how many units do you have rented? How many do you have? That'll give you an idea as well. And I do that all the time when I get really serious about buying a property, after I've done my due diligence. So this one says 100% occupied. And the broker's like, you ask him what the vacancy rate is, and I get this all the time. What do you mean vacancy rate? This property is 100% occupied. It doesn't have a vacancy rate. Well, that's not true. It might be 100% occupied, but people move in and people move out. That creates a vacancy factor there, which is lost rent time. So if you don't know what that is, this is what you need. You need this rent roll, okay? Annualize this number, okay? And then you want to take it over to your P&L that you should have gotten, okay? This here is the P&L statement for the same year as the rent roll. So you're going to see a lot of P&L statements when you're evaluating multifamily. This is probably the most common P&L statement that you're going to be sent, and that's usually going to come from, it could be a CPA that's taking care of the property, or it could be a property management company, which more than likely it is a property management company if it's a big enough property. This particular one definitely came from a property management company. The reason I know that is because I see a lot of P&L statements, and I tend to get more P&L statements that look like this from property management companies. Which these are great P&L statements. I really like evaluating properties when I get these types of P&L statements. It makes it much easier. So that what they do is they break down the revenue here, and they break down the expenses here. Okay, and then you get a cash flow down here and net operating income and other things like that. But right now, all we're focusing on is the vacancy rate, or the vacancy amount. So we need to know what we can figure in here. So on the other rent roll that I showed you all ago, you take that gross potential rent was 109,000, and you're going to input that in above the revenues line, okay? Above the revenues line, because these P&L statements, they're only going to show total revenues collected, okay? This is going to be a net, okay? If you're new to evaluating multifamily, you're going to see these all the time, and you do not want to use this as a gross. Your numbers won't come out right. So you want to make sure and understand that this is actually collected right here, okay? And so it's essential and important that you get that current rent roll to figure out what your gross potential is. So make sure you add up all the units, even the vacant units. You want to know what your gross is. So if they leave out a rent number because it's a vacant unit, add in the common amount for another comparable unit there that they have rented. Okay, just put in a number. Okay, you got to get a gross here. So any vacant units, you want to put numbers in if they don't have them, and that way you can get your gross, because you're going to fill that unit up, hopefully. So you want to know what your potential is. So, okay, you got to put in your gross here above the line, okay? It's above the revenues line. Like I said, this is net collection. So when you figure out what your gross is and you figure out what your net is here before expenses, you can figure out what your vacancy rate is, or your vacancy number. So you can solve for X here. So when you do that, you just take your gross potential minus your net here, and that gives you a number, okay? And that number will come out to a percentage of gross, okay? And that's going to be your vacancy factor, okay? That's going to give you what you need. That means this is actually the vacancy they had for the year. So you want to use that vacancy when you're evaluating the property. You want to try to get that vacancy factor in there because that's what they did, you know, that year or the previous year. You want to make sure you get as close to that as you can for a vacancy rate when you're doing your evaluations. Okay, then you input that in, and then you get your net here, and then you can take your expenses over here and get down to your net operating income, which they have down here. So you can see how they really got to that number, because now you have a gross potential rent to work with and a vacancy factor now. So let me show you guys another P&L statement. Some of you newer investors out there who are doing you're doing your evaluations and you're seeing different type of P&L statements. Let me show you another one for a different property. This is also a 24-unit complex, but this is a different type of P&L statement. As you can see, they have month by month numbers here. Okay, this is called a trailing 12 or a trending 12. You'll see these all the time as well, and it's good to get one of these once you dig a little bit more deeper into the property that you're evaluating. Okay, you're going to get also, this comes from a property management company as well, you're going to get an actual rent collected here. Okay, this is the actual rent collected number. This is not your gross. Okay, this is not your gross number. Most property management companies or even CPA accountants, they do not put their vacancy in there, and they usually do not put their gross potential in there. They'll only go with what is collected because that's all they need to use when doing their bookkeeping. So, but owners and investors, they always want to know what their gross and their vacancy is. They want to know how property is running. Is it running efficient? Hopefully it is. If not, there could be some value add in there for you based solely on vacancy numbers. Why is the vacancy higher? Why is it not running as well as it should? Is it being mismanaged? Is there something wrong with the units? There's a lot of things that can come into play with vacancy, but you need to know this number, and you need to know it going into the property. And so on this one, like I said, you get a net collected rent right here, which is an actual collection. Okay, that to get your gross potential, like I said, you need to get the rent roll. Okay, and add that up. And I'm not going to show you the rent roll for this one, but I am going to give you the total. Okay, the total was actually $119,640. That was my gross potential rent, and I got that from the rent roll. Okay, I need to put this above the line, above the income line here, because this is considered net right here. So I need to put this up above the line, and I need to take and subtract my net and to get the difference here. Okay, and that will give me my variable, which is my vacancy rate, my vacancy amount. That came out to 9,498. That gave me a vacancy rate of 8%. Now that is right on target with what I would want to see in a property, especially if I'm looking to buy a property that is stabilized and in good condition with some other minor value adds, but that doesn't have to do with vacancy. It might have to do with something different. Maybe the rents are just low and the vacancy rate is low in turn. Maybe I want to up the rents. Maybe that's the value add here. Usually, and I'll save this for another video, but when you see a vacancy rate at 5 or 6 or even less than that, usually rents are a little bit lower than market. So that's a good thing. You want to know that you can go in, up the rents, but keep the factor, the vacancy rate at 8% or higher. If it's running at 5, put in 8, because you know going in that you're going to want to raise rents. I'll save it for another video. I don't want to get too in depth on that, but it's a great value add strategy that you need to understand when looking at market rents and current rents and getting an idea of how your vacancy is playing into that factor. But anyway, that's a great vacancy rate when you're going to buy a property. I like to see that. So that means the property is stabilized and I can get good financing on it. When we go back over here to the Town Square apartment building here, we had a vacancy rate of 27%. Okay, that was very high. There's got to be reasons for this. Most likely it's bad management and a few other factors, but this property is being run very poorly at this moment, which leaves some great value add if you can get the price right. Okay, you don't want to overpay for this type of property. So you want to make sure you get the price right based on actuals here. Here's the other trending 12 here. It's the same thing. Just make sure you put your gross potential and vacancy in there to get to the numbers that you really need to see. Your vacancy rate and your gross potential. It gives you an idea of how that property is performing. So always take your P&L and always take your rent roll if you want to know what your vacancy factor is. Don't let a broker tell you that there's no vacancy factor for a property, okay? There always is. No matter how many units there are, there's always a vacancy factor, and you can figure it on your own fairly quickly if you get these 2 documents, okay? If you're a new investor and you're looking to partner up, give me a call, because I'm always looking to partner with newer investors. You can email me at asp.clintwilliams@yahoo.com, or if you want to, you can give me a call, 270-860-5929. Also, if you have any questions, you can leave them in the comments down below. I'll try to answer what I can, and stay tuned for the next video. I'm not sure when I'll get that up yet, but it'll be a good information-packed video as well. So thanks for tuning in, and I'll see you guys on the next video.